Welcome to Bitcoin. All roads lead to BTC.
Welcome to Bitcoin. On this Bitcoin-based finance channel, we show you that all roads lead to BTC. Like, share, and subscribe because it really helps the channel. Today, we're talking about institutional adoption and how that's going to drive the price of Bitcoin up to $1 million. So let's get into it. First, let's shout out to Michael Saylor. They just bought another 220 Bitcoin for approximately 27 million. And this was about 123K per coin. So Bitcoin is getting a 25% yield, at least year to date for 2025. Strategy holds over 640,000 BTC, and that's priced at about $47 billion with an average coin of 74K. They're one of the leading institutional investors, and you know, Michael Saylor is really laying out a blueprint for other folks in the Bitcoin treasury space. One of the biggest catalysts to Bitcoin's price action is institutional adoption. We're going to talk about different levels of institutional adoption and how they each impact the Bitcoin price. So as Bitcoin price rises, it gets harder for retail investors. That's people outside of the banks and Wall Street and everything to acquire a whole coin. Right now, Bitcoin's trading about $114,000 per coin, and it's getting harder to get a hold. There's very few people who have one entire whole coin, and there's going to be even less in the future. To put it into perspective, if every millionaire in the world wanted one Bitcoin, they couldn't have one. There's only 21 million. And that scarcity is key to driving up Bitcoin's price. So last week was brutal. A lot of leverage traders got wiped out. And by leverage, I mean people who are borrowing money to make trades. And you're hearing a lot of reports of multi-million-dollar portfolios just getting wiped out. And that's really unfortunate.
Over the weekend, but this liquidation that was triggered over the last 3 days, the estimates are at least 19 billion of liquidations, but it's probably understated. It might be 4 times bigger. It's the largest since 2021. Essentially, you have to go back to FTX. I think there is a lot of leverage in the way people use this product called perpetuals, which is trading on margin, you know, like 3x, 20x. And it lurks and it's held through collateral. You know, people like sort of pledging something that thinks it's safe, but when the price of that collateral drops, it triggers a cascade. Right. And so I think people talk about this thing called auto deleveraging. So a lot of leverage. Yeah.
Last reported that the markets might open up, and you know, with some drawbacks, we discussed some bearish scenarios. Surprisingly, the blowback was relatively mild. Bitcoin stable at about 114K, and this is just a pit stop before it makes higher leaps and bounds. It was a great day for the Bitcoin spot ETF. It saw over 1 billion within the first 10 minutes of trading, and that's pretty impressive. Shout out to BlackRock. They manage over $10 trillion in assets. They recently began to offer the Bitcoin ETF. And for those who are unfamiliar with the ETF, this is an exchange-traded fund. It lets people buy or invest into an asset that will appreciate like Bitcoin without buying actual Bitcoin. So BlackRock was the first to set this off, and let's hear a little bit from Larry Fink.
I did say Bitcoin, because we were talking about Bitcoin then, was the domain of money launderers and thieves. But you know, the markets teach you have to always relook at your assumptions. There is a role for crypto in the same way there's a role for gold. That is, it's an alternative. For those looking to diversify, this is not a bad asset, but I don't believe that it should be a large component of your portfolio.
So as you can see, Larry Fink of BlackRock sentiment towards Bitcoin has changed over the years. Initially, they were against it. They are one of the largest asset managers in the world. So when they give the blessing, the green light, it seems that other institutions want to follow suit. So it's good that BlackRock is getting exposure, or rather involved in Bitcoin space. Other institutions are getting on board as well. JPMorgan mentions they don't want to really deal with the custody of Bitcoin. And what I mean by custody is like taking ownership, meaning like they're going to hold it and secure it. So they are open to letting their customers buy and trade it. However, when it comes to storing the private keys and things of that nature, they're still investigating that space. Now, will they turn to Coinbase? Will they work with Binance? It's difficult to say. At the same time, these are big institutional players that are getting involved in the Bitcoin space. That's only going to pump it up.
From a JPMorgan side, I don't think that's in the near-term horizon for us. I think Jamie was pretty clear at Investor Day that we're going to be involved in the trading of that. The custody isn't on the table at the moment. There's a lot of questions around our own risk appetite of how far we want to go down that path from trading and other sides of it, and then custody, I guess, would follow. But naturally, we need custodians, so we're exploring what the right custodians for us for the business footprint that will grow.
One of the biggest catalysts to Bitcoin's price action, it's institutional adoption. As Bitcoin's price rises, it gets harder for retailers to get a whole coin. So, discussed that before. Let's hear what Eric Trump has to say. He's forecasting a $1 million Bitcoin as more institutional investors get on board.
The floodgates are opening, right? For the first time, Schwab is custodying, Bitcoin. Fidelity is custodying Bitcoin. I'll never forget. I signed into a Fidelity account not too long ago. The first thing that pops up is this little icon. Would you like to create a Fidelity digital asset wallet? And I said yes. I literally clicked yes on it, and all of a sudden you could buy Bitcoin on there. You look at what Chase is doing. You look at what all the major banks are doing, right? I mean, all of a sudden you're no longer trying to do, Bitcoin, buy Bitcoin using a ledger and using, DeFi. You can literally buy it through spot ETFs for the first time, and every bank is custodying it. I mean, we are on the 1 yard line of cryptocurrency, and we've got another whole field to run, as explosive as it's been. So I do think it hits $1 million eventually. I've never been more bullish on anything in my life. And listen, Charles, I was telling everybody to buy it when it was at 40,000, and here we sit at 115,000. Right. I'm more bullish on it today because of the legislation in this country, and because of how widely adopted it's been. And I can tell you, I talk to the biggest companies, the biggest families in the world, and every single one of them is racing to buy Bitcoin.
Other analysts are calling for a higher Bitcoin price, and that's assuming that Bitcoin becomes the global reserve asset used for global trade. The current reserve asset is cash, United States dollars, while some still use euros, British pounds, yen, and of course gold. Bitcoin is digital gold. So it only makes sense that Bitcoin will become the global reserve asset, as it has many of the perks of gold, like being used as a source of value, but it has additional benefits, whereas you don't have to pay men with guns to to secure it. Above all, when you have to audit it, you don't have to melt down your gold bars for purity and do audits. You just look on the blockchain. Additionally, you don't have to hire excess security to transport that gold from point A to B. You can send it across the blockchain at the speed of light. So that's another benefit why Bitcoin will most likely become the next global reserve asset. It's finite, and countries are going to scramble to acquire Bitcoin when it gains that status.
By 2050, this is very long term, that Bitcoin becomes a reserve asset that's used in global trade and held by global central banks at a very modest 2% weight. And in that model, we arrive at a $3 million price target for Bitcoin. Now, that sounds, extreme, but that's a 16% compound annual growth rate for a couple decades. That's not really that extreme. So into the millions over the medium term is a high conviction call.
Imagine the $60 trillion retirement portfolio allocating a portion into Bitcoin. Analysts are suggesting that for every 1% allocated into Bitcoin, it will add about $30,000 to the price. As I mentioned, there's over 60 trillion in assets and global retirement funds around the world. None of them have exposure to Bitcoin or any digital assets. So if they start allocating that into BTC, it's gonna pump that price up. And we mentioned that 1% would add 30K to the Bitcoin price, but who's really just going to allocate 1%? A conservative scenario is at least 5%, and that pushes the price to 270K, which is pretty astounding when you consider the other players that are going to be interacting with Bitcoin and further boosting the price. How much would you allocate into BTC?
There are 60 trillion worth of assets globally in retirement accounts with zero allocation right now to digital assets. Every 1% allocation from that 60 trillion adds $30,000 to Bitcoin's price. And so from my perspective, a 2% allocation would be conservative when you consider that all of those assets are currently in a monetary framework whose authorities have told you they want to depreciate it by 2% a year. So why wouldn't those accounts stake 2% of everything denominated in melting ice cube and stick it in another protocol altogether? So again, that alone would take us to Bitcoin at 175K, or up more than 50% from here. We still think we are incredibly early. We're still seeing early signs of institutional adoption. You look at Norges, the world's largest sovereign wealth fund, almost $2 trillion in assets, has been increasing its exposure to Bitcoin digital assets. It's still a rounding error for them. But when the world's largest sovereign wealth fund, the world's largest endowment in Harvard is now buying Bitcoin, starts to do it, that opens up the door for all the other relevant parties, other endowments, other sovereign wealth funds to do this in a very interesting way.
The next level of adoption is sovereign adoption. This is when we're talking about nation states, countries that are taking their money and transmuting it into Bitcoin. I could rant on and on about how fiat currencies, that is money that is printed by nations, how it's inherently worthless. They can print it to their heart's content, whereas Bitcoin is finite. And a lot of nations are waking up to that, and they're starting to initiate their own Bitcoin strategic reserves, copying what the United States government has done. And Binance is working with nations like Kazakhstan, among other nations across the world, to help them get exposure to Bitcoin. And it's only a matter of time when you start seeing countries like, consider Saudi Arabia, buying Bitcoin in the billions. It's going to be incredible. But let's hear what Binance has to say.
We have countries, sovereigns, starting to do allocations. We have just announced Kazakhstan working with Binance Kazakhstan, starting their own strategic reserve on that front. So we have different countries approaching us by virtue of the depth of our marketplace, right? So if you believe in best execution, best bid-ask spread, Binance is the place to be because we have the deepest liquidity. So you have countries approaching us. So we see that huge uptake, and institutionalization has started to happen, and happens at a quite rapid pace.
There's only 21 million Bitcoin. Satoshi holds like whoever Satoshi is. Satoshi holds about 1 million Bitcoin. BlackRock has a bunch. Michael Saylor holds a percentage of the total supply. And it's really supply and demand at its finest. Mix in, some encrypted security and other perks. Bitcoin is where it's at. So we discussed how banks are buying, billionaires are buying, countries are getting on board. And there's even speculation about retirement funds getting allocation, putting allocation to Bitcoin. As the slogan of our wonderful show suggests, all roads lead to BTC. Thanks for watching. We'll catch you on the next episode.